Good morning, traders. How are you? Ben with Investor Futures Trading. We're back in the market. Today is on topic psychology of trading. How does it affect us as a trader? What to do? How to lose FOMO? How to concentrate? How to execute position? How to stick with them? For us to understand that, I'm going to use the micro S&P contract to just give us a quick taste of how it's been implemented, how it's been done when we actually effectively are trading. So there are two major forces that are hit us every time. Is the greed and the fear, the greed for us to make another buck on our position, to stretch, to maximize the position, and the fear to lose the position, to not get in the position, to actually miss the position by a point, to chase positions, and the fear that obviously when we are in a position that we already saw before, where we are up-numbered, now we're down-numbered, what to do and how to not lose it when we keep the position or not keeping the position. Of course, this is a major part in every trader's life. It's not easy. It's also, I wouldn't want to say a mind game, but definitely the mind play tricks on you when you're up and you make a couple winning, you're thinking you're invincible. That's something that happened to every trader. So you can be like up 5, 6, 7 trades up, and this feeling of accomplishment and knowledge and invincibility is right next to you. And then in the 8th trade, you lose all the hard work. You have to keep in mind, trading is a hard work. It's not just pressing button. It's just trying to be rich in a heartbeat. It doesn't work this way. Trading is a profession, and it's a specialty. You have to learn. You have to learn the skill. You have to learn how to trade. And of course, you acquire it by actually implementing whatever you was learning. If you was learning with us, if you was learning in a different place. But the most important, the implementation and having a plan. So the idea of us talking about it today, we're gonna take this contract that we look at right now. It's the micro S&P 500, which is parallel to the S&P 500. Of course, the micro contract is much smaller, not a lot of FOMO in it. It's just a very good way to taste the water when you are starting trading. Of course, micro contract is more convenient for us to see. So I'm going to use specifically this contract today to make sure that this subject is going to be a bit more understandable. So as we see right now, ever since we start to talk, the price has been fluctuating. It goes between minus to plus, minus to plus. Of course, we are already took a position prior within the night, and I want to show you the position, of course, and why we choose this position, why we're actually in long position and not in short position, even though in the day it looks like we are still in the short mindset. So within the day, we can see right now, right here, that we have a major demand area right here. I'm going to market it right here, and we see how the price almost scratched it right here. We actually touched it one time, and second time it started to go up. That's our famous line that we are the green line, which I'm going to mark it over here as well. You can see we have some minor supply areas. Obviously, we'll see we have a major supply area on the top. This is in the day interval. Of course, this is the famous line that we talked about previous week. As we set it up, we said that our mindset, it doesn't change as long as it doesn't break it. We're still in a short mindset. Today we took a long, and I will quickly understand or show you why. So obviously, we see how the price behaves when it reaches this position, got into the major demand, started to climb up, it started to break this line, break the top, going back down, trying second test on the major demand, and right now it lands on a minor demand as well. We can see it very clearly over here. If we were gonna be a little bit more accurate, we have a minor demand over here. We can also use flux chart to show us those pool. We obviously see that we have some entry point over here. We can gonna just stretch it a bit more, the 5 minutes interval, so we can better understand. We see already here, we have, if we want to mark it in a more accurate way, we can see over here we have another pool. And if you want to see the night profile for us to understand why we took this position, I'm jumping back again to the 15 minutes interval. We see the night profile basically builds for us a double distribution a day, which basically looks like this, a belly and another belly. So a possible position for us to be in is either get into the pool over here, right here in this position right here when I marked it, or in this pool area basically was pre-created when we took this position. Of course, at this time we wanted to make a quick in and out, and we took a long position against the trend, not because we want to do it, because again the topic of the day is psychology as trading. So what do you do in this position? Of course, if you understand the story correct and the right way, and you have a plan in which you're not divided from, you're taking a decision and you stick to it. It means that as long as you have, and this is one of the tips of how to lose, how not to have a FOMO, how to basically lose the FOMO, how to basically deal with your fear. You have to have a specific plan. You have to have some way to track and monitor your growth. And this is super important. You have to make sure that you have at least some book that you are listed your trade. You see that you actually grow and you're going to the right direction. We'll say it very simple: losing in trading is inevitable, so you have to really calculate the risk and manage the risk appropriate way. So if you are not doing it and you see that you are completely reach a failure, we'll say it in a consistent way, you have to change your strategy. You have to understand and sit down and talk and analyze and see why you are failing. Don't jump to another position. A lot of traders go to something called revenge trading. They lose in after they doing a big hit, and now they lost everything, and now they're jumping back in the market. This is not how things should work. When you are losing, take a break, get out of the computer, get out of the screen, go refresh yourself, analyze, sit down, and build a strategy. Most important is to stick with your strategy ahead. If you have one and you executed your position, you should be able to go on with your day. If you're a swing trader, you should not be glued to the screen. Let the position work and let it work and let it work until you are good with your take profit. Of course, you define your stop loss. By looking at the screen, you're not going to gain a lot. There's a lot of panic, there's a lot of fear. And once the fear kicking in, you might be either closing the position, which did it in a wrong way, and then regret about the position going up when you could possibly make more gains. So you have to have the different. We all have to have a definition about where is our take profit, where is our stop loss. Most important, there is a stop loss always in every position. Do not lose the stop loss. Trading without a stop loss is 100% betting. You don't want to do it. You have to define a strategy which you are safe with and feeling comfortable, and the amount that you're risking is okay for you and make you okay to go on, move forward with your day and not to lose it. So I'm going back to this position. As we saw before, we already saw that the price went up and down, and right now it's negative 90. Of course, if you take it in a mini contract, the amount would be much higher. So the FOMO with the micro contract is much less. It's less scary. It's more. We can have a better way to taste the water, understand the water as a trader. But still, if I'm in a position, let's talk about the position we took at the actually mini contract in the beginning of the week. We took it from over here, and we stretch it. We want to stretch it all the way up to here to make it 30K, which was a swing trade. So what would happen right now when we're in this position specifically? What happened over here? If you find yourself in this position that you're already about 8 to 10K up, and suddenly you see this thing goes down, and now you're 4K again, thank God. That's again what happened to your brain. At this point, you would either close the position completely because you don't want to make it lose, and will you be very unhappy and dissatisfied with the fact that you only did $4,000 and not 10, and you didn't stick with your strategy. But a trader that defined a strategy and if chose to swing trade, it looks on the overall picture. You see right now that's what's happening over here. We have obviously see how the price behaved when he reached the demand area. Obviously, we see how the price behave over here as well. We're basically sitting on a support line right here. I can mark it right here. sit on a support line over here, and he have two ways to go. Either he breaks it and go back for the major demand for a second test, and from there it's gonna go up, or it's just gonna hold it and gonna go up from here. So if you're swing trading, if you chose to swing trade this position, let it run until you satisfy. If you satisfy as well with specifically with where you're at, that's fine. I'm not saying don't take the profit. Take the profit. Any profit is good, with no profit, of course, above top of a losing. But you cannot have the fear manage you and when you trade. So if you chose your take profit to be right here, out of understanding that this is your position, so this is your position, and it can go up and down and up and down and up and down. It's not going to change anything by you. You're just going to let it run until it's going to hit your take profit. And of course, you can monitor it during the week. It can be a 1 week or 2 week position, but this is yours to keep. So we talked about a few tips. A few tips will be to have a book to monitor your growth. You will have a strategy which you will stick and not divide from, and you make sure you not divide from the strategy, because this is what keeps you in the market. And of course, let it run and risk and calculate your risk properly. Of course, even with this position, I'm gonna reflect the results. I wish you happy trading and successful. As always, I'm happy to give more tips and more advices. This is, of course, this is not enough financial advice. You should always be consulted with your financial advisor. This is our training idea and tips. So wish you successful trading. Of course, if you like the content in the channel, like, subscribe, spread the word, connect to our Discord community. The links are in the description section and in our bio in our channel, and I'll see you on the next market overview. Thank you.